Welcome in, everybody. Hope you guys are having a great day, and thank you for joining me for this lunchtime sharing. All right, and once again, thank you Next Level for inviting me back here to share with you guys what's happening in the Singapore property scene right now. Okay, so as usual, we'll just give a bit of time for everyone to stream in. And my name is Pete, right? So today we're going to talk a lot about property, right? What is happening in the property scene today? Okay, and in particular, I'm going to talk about the new launches because do you know in October we're going to have a total of 5 new launches. Okay, and new launches is somewhat like a obsession of Singaporeans. Okay, and a lot of people love new launches, and I want to do a very quick analysis and share with you guys at the end of it which are my top 3. Okay, and also I want to share with you guys a further sharing, right, a program that you can actually attend after this session, all right, if you want to learn more about it. Okay, so for those of you who are here already, you can hear me, you can see me clearly, do type yes in the chat, all right, so that I can see that you guys are here with me. All right, so let me share my screen over here. Okay, all right. Okay, can everyone see my screen clearly? All right, fantastic. Okay, so today we're going to talk about the October new launches. All right, so yeah, okay, Esther is here with us. Hi, Esther. Good to see you. Okay, and we're going to touch on what are the condos that's going to be launching, right? And which one are my top 3. All right, so let's dive straight into it. Okay, so before I start, very quick disclaimer, everything that I share here should not be seen as a investment advice or recommendation, but it's really just me, right, as a stock market investor, right, using the methods of stock analysis into property, right? And that's how I've helped a lot of my clients to make very sound decision, right, in their property investment, right? I provide them with the information, I share with them the data to help them make better decision, more informed decision from there. Okay, so once again, do your own due diligence before you jump into any form of investment, right? Now, these are the 5 new launches that is going to take place coming October. And you can see they are of various date, right? So the earliest one is going to be Sky at Holland over here, okay? And that's going to be around end of September. After that, we're going to see Faber Residences along Faber Walk, okay? Penrith and Margaret Drive and Zion Grand, right, happening in mid-October, and then later part of October, we're going to see the Sand, which is along the Jalan Jurong Kechil around the De Souza Avenue area, right? So these are the 5 that I want to go through, and I'll go through each one of them to share with you which one are my favorite, and more importantly, what are the pros and cons, okay? Now, have you ever wondered why, right? Now we are at the September, early part of September, but there's not going to be any new launch at all, right? Until the end of September. Do you know why? You want to make a guess? Why is the developer taking a break? Are they not doing anything? Okay. All right. Yes, I think many of you got it. It is not because they are taking a break. It is because right now we are in the midst of the 7th lunar month. Okay. So in the Chinese context, this is also known as the Ghost Festival, or in Singapore, we call it the Hungry Ghost Festival. Okay. So this officially started 23rd August, and it will only end, okay, 21st September. So it lasts for a month. And generally, developers do not like to do any new launches during this month because it will be seen as inauspicious. Okay. And that's why you're going to see all the new launches coming up, right, only at the tail end of September onwards. All right. So with that said, before I go into each one of the sharing, just now I mentioned that after today's sharing, right, because it's going to be 1 hour, I don't have enough time to share with you guys the full plan on how I look at property and how I analyze property. So for those of you who want to attend a follow-up session after this, all right, it's going to be a complete 3-hour session, okay? I'm going to be hosting this program called the Property Xcelerator Mastery, okay? So it'll be held on the 21st September for the first session, or if you can't make it on the 21st September, there's going to be a rerun on 1st October, okay? So one's going to be on a weekend, one's going to be on a Wednesday, and both will start from 7 to 10 p.m. So this is where I'll share with you the full methods on how I use stock analysis to look at property, right? And why it works, okay? And how this can help you find gems in the property market and make better decision, okay, and help you to invest more confidently. So for those of you who are interested, later on, I will share more about this. But for those of you who want to jump on the opportunity right now, the QR code is over here. You can scan the QR code and you can actually register to join either one of the dates already. Okay, now let me start with the first condo, right? That's going to be launching end of the month, and that is Sky on Holland. Okay, so this one has been really popular. Everyone is anticipating it because it is within walking distance to the Holland V MRT. Okay, and in terms of amenities, I would say this is unrivaled because it's next to one of the most popular mall right now, One Holland Village Mall. Okay, so this is a mall whereby it's very pet friendly. When you go on the weekend, you will see a lot of dogs and other pets, right? And there are a lot of malls there. There's also groceries that you can make as well, right? So in terms of location, I would say is very good, prime location, right? But the downside is there isn't seem to be any primary school within the 1 kilometer radius. Okay, so for those of you who are watching this from overseas in Singapore, location is important, right? Property always says location, location, location. And in Singapore, education is also very important. So the location towards the education is very key, right? So in Singapore, if you want to get into the school of your choice, you want to stay near the school, right? Preferably within 1 kilometer. So in this case, this condominium has a bit of a blemish. There isn't a school within 1 km. However, between 1 to 2 kilometers, there are several good schools over here. Okay, so you can see right here, this is the new condo, right? That's going to be coming up, Sky at Holland. Okay, it is right beside the Holland V MRT station and is already is next to a condo that is already being built. So later we'll look at the performance and see how it does. Okay. Now, in terms of developer, I would say this is really one of the few whereby the giants come together. Okay, so you can see right here, the developers are UOL, right? Singland, King Leong, and also not forgetting CapitaLand, right? So these are the big giants come together. So you know that the quality is going to be pretty good, right? And these are the layout and the unit mix. Now you can see immediately from the unit mix, this seems to be a more investor focused development, right? You can see across at the two-bedder segment, right? If you add this up together, it's already more than 300 and right. I think 370 in exact, right? 370 units of just two-bedders, right? There is no one-bedder, which is great news because usually I tell my clients looking at the data sets, right? One-bedder doesn't seem to do very well in terms of profit returns. Okay, not just the absolute amount, but in terms of percentage of returns as well. Okay, so I'm very happy that they're doing two-bedders here. Then you also have the three-bedders, four-bedders, and also 37 units of the five-bedder. So these are quite rare because these are huge units. Okay, so whether these units will sell is yet to be seen, right? Because you will expect the price to be very high as well. But generally, what we get from here is this is definitely going to be a more investor-focused layout. Okay, and you can see this is actually not a big plot, right? It is like a L-shaped plot where there are only two buildings and there's not much land left, right? Other than putting a swimming pool and some greeneries, and that's about it, right? So this is quite a highly dense development as well. Okay, all right. So in terms of area, you can see that around there isn't much condos nearby. There's only a few. In fact, this area is also known for its freehold, right? So in terms of leasehold condo, for example, like Sky at Holland, right, it's actually not that common. Now, let's look at the immediate neighbor, One Holland Village Residence first. This condo hasn't fully TOP yet, so we don't have many transactions. We only have one, okay? But the one transaction actually did not bad, right? It got about close to $500,000 of return. And the sales price is a whopping 3,781 per square foot. So this gives you a sense, right, on how high the prices in Holland Village has become, okay? But other than One Holland Village, we also have other condos nearby. For example, Hill on Holland. Now, to give you a perspective, where is Hill, right? Hill is actually all the way here, right? So it's not as close to the MRT station, right? Now, when you look at Hill on Holland, you can see that generally the profit profile is decent, right? For the two-bedders, it makes about maybe generally like 100 over 1,000, but the three-bedders is the one that really shine, making about 600,000. So what does this tell us is that another point, right, is that when we are researching, for example, when we are researching stocks, we want to ask ourselves, is there certain type of investment that is particularly sought after in the area, right? And in this case, when we transfer it to property, we want to ask a similar question. Is there a particular layout that really attracts more money, right? More cash, okay? And you can see in this case, going for a 3-bedder will be a much better choice, right? Compared to buying a 2-bedder, because the return is not just one time more, but is close to 2.5 times to 3 times more. Okay. Now let's go to the other development. That's also along the Holland, Hill on Holland area. That is Leiden Green. Now this project was very popular, and the good news is that we are starting to see some resale transaction here, right? So out of the transaction that was sold, actually all 28 of them were profitable. Okay. And you can see the return profile here is very similar to Hill on Holland. Once again, the large size unit, right? The 4-bedders here and the 3-bedders here are gathering a lot more cash flow, a lot more profit, right? Okay. But the issue is this. The issue about this area ultimately lies in the price. Okay, so let's look at how much the developer bid for initially, right? So the developer got this bid at about 1,285 per square foot. So it isn't exactly very expensive. In fact, the break even based on the calculation from HProp is about 2,200. So the question is, how much will they price it, right? Very simple. We just need to take reference to what was recently transacted at a good record sales volume, right? So you can see over here in terms of recent transaction, there is around the central area of Singapore, District 910, River Green did 88% sold, and the average per square foot was 3,130. Okay. Promenade Peak sold more than half, right? 54%, at even higher per square foot, 3,343. So both are in the central area, very similar. These are Zion area. This is in Holland V, and both are also very near to MRT station. Okay. So how would CapitaLand UOL price this development for Sky at Holland? My prediction is that it will be starting around 2,900 on average, maybe even hitting 3,100, because this location really can rival what we see at Zion Road as well. Okay, right? So this is Sky at Holland. Keep this in mind. Later, we will have a poll to see which one is your favorite. Okay, the next one is actually Faber Residence, right? Or Residences. Faber Residences is right over here. Let me just draw a circle, right? So it's right in front of an existing condo called Waterfront at Faber. The immediate highlight of this area is that it is not very near MRT station. Okay, so if you look to your left, yes, there's going to be the Jurong Region line in the future, but this is still quite a walking distance, all right, quite a long distance to walk. Or to your right, Clementi station is right by here, is about 1 km or more, right? So it is not exactly near MRT station. So immediately this might throw some people off, like, oh, maybe this is not a great development. But what we want to see later on is looking at the condo nearby. The good news is that there's quite a lot of young condos that we can take reference from. Okay, see how they perform, and you will naturally know how Faber Residence can perform. The good news for Faber Residence is that while it is not near the MRT, it is actually very near some schools. Okay, so Nanhua Primary, which is a very popular school, is within 1 kilometer. And in fact, there are also 4 more schools between the 1 to 2 kilometer area. Okay, now, who is the developer? Actually, this is the Coco Land. And if it's familiar to you, you are not mistaken, because Coco Land is actually also the developer for Springleaf Residence, which recently sold a whopping 92% on the first weekend, okay, right? And the per square foot is about 2,175, okay? Now, when you look at the location, you can see this is going to be Faber Residence, right? If you look up, there's Waterfront, and below there are also a few more condos, right? So we can take reference from there, right? So number one, let's look at Twin View that's below it, okay? So Twin View is a very new condo. It was only done in 2021. And you can already see that the profit level actually is pretty good, especially for the larger size unit. For example, 4-bedder making 785,000, 3-bedders over here make 600,000. There's one 3-bedder that didn't do exactly very well, okay? And my suspicion is that because it was bought in 2021, right, quite recently. But otherwise, if you look at even the 2-bedders make about 400K, right? 3-bedder here about another 400K. Another 2-bedder here make 400K. So the profit level actually is not too bad. Okay. In fact, ever since they started their reselling, okay, the resale property, so far we have not seen a single unprofitable transaction. Okay. So one thing to take note of is, yes, in Singapore, generally people would prefer a place that is near an MRT. But one thing we know is this, right? Especially in the stock market, we always say this: there is no bad investment. Okay. Everything is a good investment at the correct price. So what does this mean is that when this was launched, while it's not near MRT, what they got was a very, very good price. Okay. And that's how they still become profitable. Okay. So one thing to remember, especially for those of you who are coming for the 3-hour course, is not to write off any property, right? Just because it's not near MRT. Always look at the price itself. Okay. So Twinview did pretty good. Let's look at another one, Whistler Grand. So Whistler Grand is about 1 year younger, built in 2022. And you can see the profit is actually pretty good, right? The 2-bedders are generally making about 300 plus over here, 300 plus. There's one 200 plus, but otherwise quite a lot of the 2-bedders are making 300 plus. And the 4-bedder here are making $800,000 of return. Okay, so not too bad as well. Another one, Park Riviera. This is slightly older, 2019. And you can see the profit level speaks for itself, right? 4-bedder is doing very well. The 2-bedders are okay, right? The 2-bedders are okay. There's one 3-bedder here that didn't do quite well. I really don't know why. I wonder why. Okay. But overall, what you can see is that this area also favors large size unit. And that is very important to know that whether this area favors large size unit or small size unit before you make your investment decision. Okay. All right. And then, of course, the immediate neighbor, waterfront at Faber, 2017, done. All right. And then you can see these are the profit level. So another thing to take note of is you can see the profit level here seems to taper off as the property starts to age a lot further. Okay. So this area generally is very good for new-ish condos, but once it becomes a little bit older, you can see that the profit level starts to taper off. Okay. So once again, the issue is how much will they price it? So when we look at GoGo Land, when they sold Springleaf at 2,175, actually their break-even price based on their bid was 1,688. Okay, so let's take a look at Faber Residence. The break-even price for Faber Residence is very similar and 1,682. So how would they price it? My prediction is that they will price it about the same as Springleaf. Now, why is that the case? Although Springleaf is very near the MRT, but the location is further out. Whereas this is in the proximity of Clementi. So there might be a chance that they will price it similar, but if they can price this even cheaper, let's say like 2,000 per square foot, maybe even 1,009, I don't know. I think 1,009 is really a stretch, but if they can price it at 2,000 per square foot, I think that will be quite an interesting price point that a lot of people will be interested in. Okay, all right. However, one thing to take note of is that right now, when I look at all the resale units, for example, Park Riviera, Whistler Grand, and Twinview, actually the prices are around 1,800, close to 2,000 per square foot, right? So I think it's a bit unlikely that the developer will price below the resale market. So my prediction is still that they will launch it at about 2,100 per square foot. Now, take note, this 2,100 per square foot here is not directly comparable to these older projects. Why? Because of this thing called a harmonization, right? So basically anything that is launching recently, right, will generally be about 5 to 6% more in terms of per square foot, because right now we do not consider the aircon ledgers as part of the gross floor area already. Okay, so if you just add about maybe 5% to all this development, then it will be around 2,050, even closer to 2,100. Okay. Next, let's go to Penrith. Okay, so where is Penrith? Penrith is at Queenstown MRT, right? So it's over here. It is right next to Queenstown Primary School, very near the MRT. And one important feature and highlight of this area is that all these purple color neighbors that you have, they are very likely going to be $1 million HDB, okay? Because of the location, and this is near the Dawson's, right? Area where a lot of the HDBs are going to be priced at $1 million and above. Okay. In terms of schools, of course, Queenstown Primary is within 1 km, and then you have 3 other schools within 1 to 2 km. Now, what are the other features is that this plot is also by GoGo Land and Hong Leong. So this time round, in terms of new launch, GoGo Land already has 2. Okay, right? the price was actually very decent, 1154 per square foot. Okay, so what we can do is, firstly, let's look at the neighboring projects. And one thing about Penrith that I really like is that because it's so near to the MRT and the proximity to all the amenities, right? We can see that in the past history, there has been very high demand. For example, Alta sold 65%, right? Even though it's not exactly near the MRT. Ori, also a small distance to the MRT station, also sold 86%. And mind you, the per square foot on average is 2,700. Okay, right? And of course, Lindenwood, right next to MRT, sold 94% at 2004. And another Coco Land project, Springleaf, once again, sold at 92%. So you can see that when it is in a good location near MRT, generally attracts a lot of attention, but you can also see that the price is significantly higher as well, right? So what do we see in the neighbors, right? So for example, Queens, near to it, you can see the profit level is very good. Three bedders are generally making in excess of like 500,000 on average. Okay, fantastic results. If you look at Commonwealth Tower, the two-bedder, three-bedders are the one that really brings in the dough. Once again, guys, important to take note here is that you can see the disparity between one bedder and the rest is huge. So I generally do not suggest people buy one bedder unless you don't want to make money. I'm just kidding. But if you're just buying for your own use, you're not looking at profitability, then sure. Okay, but if you're looking at making a good amount of profit, then you can see that it is not that much, right? By the time you pay off your taxes and whatnot, right, actually you might still be making a loss. Okay, so Commonwealth Tower did very well. If you look at Queen's Peak, which is also beside Commonwealth Tower, also did fantastic results, right? Three-bedder generally 300-400K. There's even a five-bedder that make $1 million, right? And if you look at Sterling Residence, which is the youngest of this area, three-bedder generally make about 400-500K. Even the two-bedders sometimes can reach about 400K, but I would say realistically, two-bedders you can aim for about maybe 200K over here, right? And one thing to take note is that all these are all profitable transactions with zero unprofitable transaction. Okay, Queen's Peak after so many years only had 3 unprofitable, and even for Commonwealth Tower only got 5 unprofitable. So this area is generally well liked by investors and own stayers, and people are willing to pay good money for it. Okay, there are next door neighbor, not exactly next door, but the same area, Margaret Drive area where Margaret View is. Okay, the profitability is also very strong. All 64 resale transactions all are profitable. Okay, right? So once again, what's the issue? The issue is, of course, the price, right? So Margaret Drive, the break-even price was around 2,000 per square foot. But if you look at nearby Clementi, for example, Alta sold at an average price of 2,500 per square foot, okay? So my prediction for this area is that it is likely going to be priced even higher than that, right? So my thinking is around 2,600, 2,700 will be decent, okay? But there might be even a chance that they will price higher than this, okay? So I put an average price of 2006 to 2007. Now, next up is the one that many people have been waiting for, and this is the one that I got the most requests, right, to do a quick analysis on it, is Zion Grand. Okay, so where is Zion Grand? Zion Grand is actually the one over here in orange color. Okay, it is closer towards the Havelock MRT. Now, why this is so crucial is because recently there were another 2 new launches over here, right? So over here, this is Promenade Peak, and right above, outside of this picture, there's another condo called River Green. Okay, and they both did very well, right? So there's a lot of expectations for Zion Grand. Okay, in terms of schools, the good news is that River Valley Primary, okay, is within 1 km, and your amenities, of course, you are near to Great World City. Now, the difference between Zion Grand and the other 2 is that this is not just a residential, but a residential with a commercial on the first level, right? So that usually gives it a bit more convenience as well. Okay. And one more thing to highlight is that this area right now is the land sale area where there are a lot of plots of land going for sale. Okay, in total, looks like there's 5. And if you look at the bottom plot, which is this one, okay, this is Zion Road Parcel A, is actually the lowest price so far at 1,200. So the question is, will we get a good price from the developer, right? Now, let's look at neighborings, right? For example, nearby we have Tribeca, right? 2010 project, so not that young already. You look at profitability, I would say is pretty strong, right? Pretty decent. But all these profits are quite high is because these projects are bought very long ago, right? So 2010, 2009. So if you look at annualized return, then you can see that actually is not that great, right? Whether is it 3 beta, 4 beta, the annualized return here seems to be a bit more lacking. And we are seeing a bit more unprofitable transaction as well. Okay, so this Tribeca, Riviera, this is also very near where Zion Grand is. This was very new, 2023. Okay, and similar trend, right? Overall profit looks decent. Okay, but if you look at the annualized return, is actually not that great, between 1% to 3% maybe, right? Only a couple of them made about higher than 3% return. Okay, we don't have a lot of data yet. So far, we only have 12 transactions while they are all profitable. Okay, but we also have 2 transactions that is not profitable. All right. So once again, the issue is the price, right? What is the price that's going to happen? The break-even price for Zion Grand is actually pretty strong because it's at 2,000 per square foot, given how low the price they bid for. Okay, and if you look at Promenade Peak recently, all right, the 1 to 3 beta, they say over here, the 1 to 3 beta at Promenade Peak on average sold for 2,894 per square foot, whereas the premium unit sold for 3,343 per square foot. Okay, so my prediction for this area is likely going to be around 3,000 to 3,100 per square foot. If they are launching similarly at 2009, then I would say it is a pretty fair price, right? People will be very interested in it. Okay, and last but not least is the Sen. Now this is going to be a bit further from the central area. This is right at the Jalan Jurong Kechil at the De Souza Avenue area. Now, the first thing to take note of is this is not walking distance to MRT. This is just too far to walk already. Okay. Now, let's look at comparing the neighboring condos, for example, Bukit Region, Verdale, all this, right? Okay. So Verdale, when we look at the profitability, okay, not too bad, but really nothing to shout for, right? In terms of annualized gain, is pretty strong, but that's because this one is just TOP, right? So we need to see how the transaction happens later on. But if you look at older projects, for example, Hilford, right, then you can see the profitability really drops off quite sharply. Okay, now this could be also because Hilford is a low lease project. I think the lease is only 60 years, it's not 99. Okay, but the overall return here is not strong. And if you look at Bukit Region, which is the nearby condo, yes, the returns are a bit better, right? It seems to be very good. Annualized return, we can get about 4 to 6%. However, just take note, out of the transactions, 71 of them are profitable, but we actually saw 21 transactions not profitable. So this area, in a way, then it seems a bit risky. Okay, it's like in the stock market, we ask ourselves, we want to buy into a certain company. In this case, we want to buy into a property. We want to ask ourselves, what are our odds of success? Okay, if our odds of success is 21 to 71, then gives a bit of trepidation. Okay, isn't it? All right. So with that said, which are my top 3? Okay, before I say anything, can I ask the audience who are watching right now, right? Which one is your favorite? Which one is your number 1? Can you type in the chat? Okay, which one is your number 1? I'm just going to bring up all 5 of them so that y'all can have a look. Okay, all right. Okay, so out of all these 5, Sky, Faber, Penrith, Zion Grand, and the Sen, which one is your favorite project? Before I share with you my top 3, okay? All right, type your answer in the comments, okay? Okay, I see quite a bit of Zion Grand, some Sky, okay. What else? Oh, Penrith as well. Okay, so let me share with you my top 3. Okay, now my top 3 is number 3 is drumroll, Faber Residences. Okay, so why I put Faber Residences as my number 3, right? Even though it's not near MRT, is because the surrounding project, actually look at it, right? They have done really well, right? For condos, there's no near MRT, you can get about 400, 300K on your first 4 years, first 5 years. It's actually pretty good, okay? So I'm putting number 3. If the developer give a good price, then potentially this can be a very profitable project as well. Okay, so that's my number 3. And number 2, drum roll, is Zion. Okay, so looking at the demand, right, from River Green and also from Promenade Peak, I think Zion Grand is going to be very well sought after as well. And plus, there's a good chance because the developer bought it at a much cheaper price. Okay, hopefully they will also price it at a much lower price as well. So if you got a good area, same area as Promenade Peak, River Green, but can enter at a lower price, potentially lower price, then that could set up for a very profitable investment. Okay? And of course, drum roll, what is my number one? My number one is actually Penrith. Okay, so why Penrith? It's actually because very simple. When you look at Penrith, right? Okay, let me just go back to my Penrith slide. Okay, so if you go back to Penrith and take a look here, you can see that, like I said, surroundings, there are a lot of gonna be $1 million HDBs. Okay, and if these people, when they were to sell their HDB and they want to stay back in the same area, okay, very likely they will have to buy one of these 5 condos over here, right? So which is Penrith, Commonwealth Tower, Queen's Peak, Queens, and Stirling. And one thing we know about buyers is that they generally like new things. Okay, they like new projects, new development. So when Penrith is done in 2028/2029, actually many of these HDB will also just about reach their minimum occupation period, MOP. That means they are able to sell out their HDB and buy a private condo. So if they like the area, very likely they will buy back either one of these, and Penrith is going to be the newest in town, right, by then. Okay, so in terms of the demand, I think this is going to be very strong. And looking at the demand at Alta, Clermont, or the Clementi, Queenstown area, the demand is so strong. Plus, when we look at most recently at Lindenwood, where it's also near MRT and also proximity to amenities, the demand is super high. Okay, so I think all these give it a very, very good setup. So therefore, my number one choice over here is actually, right, Penrith. Okay? How about you guys? How about you guys? Okay? Now, why why am I putting up these top 3? Is because right now going into the market, of course, a lot of people are looking at resale or new launch, but one thing to take note of is we also want to look at profitability beyond new launch. Okay, so for example, right now when we look at new launches, one thing that I'm always very cautious about, right, is paying too high a price. So therefore, when I work with my one-on-one clients and they ask me, hey Pete, can you do analysis and data for us so that we can take a look at it? And I always share with them, you don't actually have to just buy new launch. Okay, while new launch is like the darling of a lot of people, but there are also gems in the resale market. Okay, so for example, here looking at finding profits beyond new launch, this is actually one of the projects that I've shared with some of my one-on-one members as well, whereby you can look at the profitability. Okay, is crazy, is nuts. 900K for 3-bedder, 700K for 2-bedders. I think the lowest 2-bedder here is like almost $500,000 as well. The 3-bedders here about making 900K. So who is to say that only new launches can make money? In fact, right now, the differences between new launch, okay, and resale prices is much bigger than the past. So in fact, I'm seeing more good deals, gems in the resale segment right now because the new launch prices are pulling ahead. That makes the resale attractive because eventually the resale prices will pull closer towards the new launch as well. Okay, so this is my sharing with all of you. I hope it's useful for you guys. And once again, it's not just about new launch, right? You can also look at resale. And that's what I do for my one-on-one client. And once again, for those of you who want to find out more, right, to learn more about how to invest in property confidently and achieve strong profit, right? I just want to share with you guys, once again, we are holding a two sessions, okay? 2 sessions of events, right? Of 3 hours that's going to be happening on the 21st of September, right, on a Sunday from 7 to 10. Or if not, you can join us on the 1st of October, right? So it's just going to be these 2 runs. I just want to share as openly as I can. I want to value add to the next level community, right? Really to thank them for inviting me here to share my knowledge, okay? So this is the Property Accelerator Mastery, 2 days, 7 to 10, just 3 hours. I want to share with you my full analysis. How do I look at stock market using stock market analysis and use it on property to achieve success? Okay, so in that 3 hours, what you will learn is, for example, how looking at from HDB to condo, what are some of the things that you need to do smartly? I know a lot of people are just looking at upgrading, from HDB to condo, but what are the things that you need to watch out for? Okay, another thing is, how do we spot for example, like the one that I just showed you, this golden goose condo, right? Resale condo that are sitting on a lot of potential, right? How to identify all these so-called undervalued condominiums by using real data, real analysis, not guesswork, okay? And of course, for those of you who already have a house, be it a HDB or condo, also share with you how can you restructure your plan should you want to take this investment journey further. And last but not least, I also have clients who are at the later part of their investment career and they say, hey Pete, how about cashing out strategies? Okay, so I'll also be sharing how can you cash out from your condominium smartly, right? Without losing the golden goose or without trimming away the golden goose too much. Okay, so there are a lot of things that I want to share with you guys. It's going to be beyond this 1 hour or 45 minutes that I can share with you guys. So therefore, we are doing 2 runs of this 3-hour session. Okay, so you can go to this link over here, rebrand.ly/propertyxm. XM stands for Accelerator Mastery, or you can just scan the QR code right now over here. Then you can join the session. Okay, the session right now is absolutely complimentary FOC. Okay, for those of you who want to join. Okay, so you can see the QR code in the live stream right now as well. Okay, at the bottom, and also in the chat, we also have the link. That's the full link, right? So I've shortened it to this one, but if you want, you can use the one in the comment segment as well. Okay. All right. Okay. Any questions from the audience? Any questions from all those of you who are watching this right now? Okay. Now, I didn't want to take up too much of your lunch time, right? So I'm going to share very quickly. These are the 5 condos coming up. Are you guys looking at these 5 condos? If you are, let me know what are your thoughts. Okay. Do you agree that Penrith is the top choice? Or if not, which is your top choice? All right. Put everything down in the comments. Okay. If not, that's all I have to share with you guys, right? Once again, for those of you who want to join me for further, deeper analysis on property, I'll be doing live demonstration as well on how I analyze property. So what I will do is I'll actually get one of you to share with me, okay, which condo are you looking at? And I'll do on-the-spot analysis to share with you, in my opinion, is this worthy of your investment, okay? So I believe in practical and theory, and you will get all these things during the Property Accelerator Mastery class on the 21st or on 1st October, whichever suits your timing. Okay? If not, guys, thank you for joining me over lunch. I wish you guys a very great day ahead. Enjoy your lunch and also wish you all the best in your property investment journey. All right? See you.